Okay, can you hear me, guys? Good. Okay. Let me approve some. Okay, so let's start our tutorial, our first tutorial today. So the topic is non-current asset, but before we start the theory, let's start with some introduction. So my name is Subagio Effendi. You can call me Subagio or Effendi, whatever is easier for you. My office used to be at the building 8, level 7, but the building is currently closed, so I'm officeless at the moment. Okay, so you cannot come to my office. My email is this one, so just my name with the UTS edu.au. You can also contact me at the Microsoft Teams, so we can chat or discuss through Microsoft Teams. The tutorial time is this time, so Thursday at 6 p.m. up to the end of the semester, except the Stufak week via Zoom. And if you need to meet me, or if you want to discuss some problems with your study, you can meet me on Friday, 2:30 up to 4 p.m. You can meet online or in person. Okay, but you have to email me first. Okay, so before the meeting. Okay, so you can contact me if you have problem with the tutorial questions, homework submission. I think some of you already have some problem with the homework submission and tutorial attendance issues and specific accounting issues. So if you have a general issue, you can post it on UTS Online. But if you have some specific issues that you want to discuss, you can always contact me. Okay. So short introduction about the subject. I'm sorry, I think I used the wrong file. Wait, okay. Okay. Okay, so this subject is basically a continuation of the accounting A that you have already done in the previous semester. So we will cover the other half of the textbook. Okay, so the first cluster of this subject, we will discuss more topics on financial accounting. So we have non-current asset, which is today. We have partnerships, shareholders' equity, cash flow statement, and financial statement analysis. Once we finish all the financial accounting topics, you will have your MyOB assignment. Okay, so you have MyOB assignment due on September, I think, end of September. And once you submit your MyOB assignment, we will move to the second part of the subject, which is more on management accounting topics. Okay, so we'll have another 5 topics on management accounting. So we have accounting and ethics, budget for planning and decision making, flexible budget and variance analysis, performance management system, and accounting for sustainability. Okay, and then you will have your final exams. Okay, so it's basically 10 topics, half on financial accounting and half on management accounting. Okay, so how we arrange the tutorial. So I will spend like 20 or 25 minutes to review the theory. Okay, just to make sure that you learn something from the lectures and to refresh your memory about the theory of the topic that we discussed. Okay, and then I will spend like 50 to 55 minutes to discuss the homework question. Okay, so we'll try to cover all the questions. And if we still have time, we try to cover the extension questions or additional questions that you have. Okay, so hopefully 1/2 hour will be sufficient to cover all this theory and some questions. Okay, are you okay with this arrangement?
Yeah.
Okay. Next is some admin information. The subject outline. So in the subject outline, you can see the homework questions. So some student answers a wrong question because they didn't check this in the subject outline. So before you start doing your homework, it's better to check in the subject outline the questions numbers and the discussion questions. Okay, so you can also print out the subject outline. The textbook, we basically use the same textbook that we use in accounting A. So we use the orange textbooks in financial accounting topics, and we use the blue textbook for management accounting topics. Okay, and we also have one more reference is the MyoB practical guidance. So Greg Pasmandi is one of my colleagues in the business school. He authored, I think, a very practical book to use the MyoB. Okay, I think this book is available in the library, so you can have a look and start reading it. And by the time that you get your assignment for MyoB, you already have some information on how to use the MyoB. Okay. Assessment. So we have 4 assessments in this subject. The first one is the homework from this tutorial. So the homework will worth 10% of your total assessment. I will collect, I will check, you have to submit it every week, but I will check only 3 to 4 times randomly. Mostly I will check 4 times. Okay, so each homework will worth 2.5 of your total homework mark. Okay, so the homework should be handwritten and scan. You can scan it or take a picture of it and upload it to Microsoft Form that already emailed you the link. And then type the answers to this discussion question in the Microsoft Form, or simply copy paste to the Microsoft Forms. Okay. And the marking will be based on 4 criteria. So if you do not submit your homework, you get 0. If you only answer 1 or 2 questions, you get 33% out of 2.5. If you answer almost all the questions, you get 67% of 2.5. And if you answer all the questions, you get 100%. Okay, so the most important thing that you try to answer. So I only check the completeness of your answers, not the accuracy. Okay, so as long as you answer all the questions, you get the full marks for homework. Okay, so the due time for homework is every Thursday morning, 9 a.m. Okay, so please do your best to submit before 9 a.m. But if you have a problem of submitting the homework, just email me. Okay, so I may consider to accept late submission. Okay, so next is MyoB assignment. This will worth 15% of your total assessment. The due date is 23rd of September. So Nelson will allocate you the case. Once you receive the case allocation, you can start doing the MyoB assignment. Okay, and then online quizzes. So in total, you will have 5 online quizzes. So once we finish 2 topics, you will receive 1 online quiz. Okay, so the first one will be after we're finishing the partnerships, so non-current asset and partnerships. The quiz will be 12 questions, multiple choices. Okay, so the question will be taken randomly from the test bank. So each student will get different questions. So best 4 results out of 5 attempts will be taken as your online quizzes mark. So in total, you get 20%. Okay, and lastly, we have the final exam. Final exam will cover all the topics. I think we should assume that this final exam will be online. Otherwise, I don't know. Maybe by the end of the semester, you will get more information about this final exam. But for now, let's assume this will be online. This will cover all the topics. You have 2 hours. Okay, and a minimum score that you have to get from this final exam is 50, I think. Okay, so in order to pass the subject, you should score at least 50. Okay, in the final exam. Okay, what is our expectation in this tutorial? So let's do our best to start this tutorial on time. So if you have problem, hopefully not later than 5 minutes. Be active, so ask any questions. Okay, you can unmute your microphone and interrupt me anytime you have questions. And you can also type your question at the chat box. Okay, so more question and more knowledge. Okay, some tips in succeeding this subject. I think it's basically the same tips for succeeding the accounting A. So basically the keyword is practice. Okay, so this subject is not difficult, but it requires more practical or mechanical knowledge. So please practice more. Try to do the homework question, self-study questions. Okay, and whenever you have a question or you have problems, you can talk to me, or you can talk to Nelson or any other tutors. Okay. Okay, so if you have a problem, you can post the question at the UTS online discussion board. You can book consultation times with Tia or with Nelson or with me, or you can also talk with the counseling services. Okay, that's all the admin matters. Any comment or question before we start?
Yes, I would like to have a question.
Yeah, sure.
So I just want to ask about the MyOrg.
Yep.
So how can we have access to that?
You mean you need to install it in your computer? I think after Nelson distribute the case study, he will provide you step by step how you can install the MyOB and MyOB Plus to your PC. Okay.
Okay. So for now, that assessment doesn't start yet, right?
Not start yet.
Yeah, okay. That's all.
But I think it's better. Yeah, it's better for now that you start reading the book written by Greg. Okay. So start familiar. Yeah. No. The MyOB practical guide. So this book. Okay. So account right plus practical guide to computerized accounting. I think this book is available in the library, but the stock may be limited. So if you're fast enough, you can borrow this book.
Yes, okay. And the information of the book is posted on UTS Online as well, right?
Yeah, I think it's available. It's also available in the subject outline.
Yes, okay. Thank you.
Yep. Okay. Any other question before we start? Attendance requirement. Normally, if it is not online class, I take attendance, but for online class, I just simply take attendance from Zoom. So I can check the number of attendance through the Zoom panel. So don't worry about attendance.
If we're not able to attend a week, just let you know through email.
Yeah, no problem. And I will make the recording also available for you, so you can check the recording.
Thanks for that.
Yeah. Okay, so now let's start with our first topic, which is the non-current asset. Okay, so let's start with the characteristic of non-current asset. So basically, a non-current asset could be a tangible asset, right? Tangible asset is something that we can see, we can touch, okay? So they have some physical presence. So something like vehicle, machine, buildings, or equipment. Okay, so that could be the tangible non-current asset. Okay, and non-current asset could also be intangible asset. So asset like trademarks, patent, royalties, copyright, goodwill could be an intangible non-current asset. Okay, so the without physical form, but they have economic value on the asset. So it could be tangible or intangible. Okay, the next characteristic is that the company is intend to use this asset for their own business operations. Okay, so if a company purchases a vehicle, they intend to use this vehicle for their own operation. Okay, not for renting out to other company, or not for as an investment asset to generate passive income, or for other purposes. Okay, so this basically differentiate non-current asset with property investment. Okay, so for non-current asset, the company will use this asset for their own operation, not to generate any income. Okay, and the company also intend not to resell this asset. Okay, so this differentiate a non-current asset with inventory. So for example, if a company purchase a vehicle and they intend to resell this vehicle to other company or to their customers, they cannot record this vehicle as a non-current asset. Okay, so they have to record this vehicle as an inventory, okay, or a current asset. Okay, so non-current asset is not an inventory. Okay, so it is a very important difference. And then the economic life of this asset is lasts more than one accounting period. Okay, so more than one accounting period. This differentiates non-current asset with a type of asset which is only have one accounting period of economic life. Do you know what kind of asset is that? Which only have one accounting period of economic life?
Current.
Current asset, yeah. So this is the current asset. Okay, so because we have more than one accounting period of economic life, we have a problem with allocating the cost or the value of this asset throughout the economic life of this asset. Okay, so allocation problem is always one of the main issue in the accounting treatment for non-current asset. Okay, so the idea is that we have to allocate the cost or the value of this asset throughout their economic life systematically. Okay, so we could maintain the matching cost against principal, matching cost against revenue principal. So mostly we use a method called depreciation. Okay, so depreciation is simply a method for systematically allocating the value or the cost of this non-current asset through the economic life of this asset. Okay, and lastly, we have to record this asset in the balance sheet. So in the asset group, so in the balance sheet, we start with the most liquid asset. So we start with cash, short-term investment, account receivable, right, and supplies. So all the current asset, and then after that we move to the non-current asset, which is less liquid than the current asset. Okay, we start with the vehicle, machine, equipment, buildings, or any other non-current asset. Okay, and then we have to record this asset at their book value or the carrying amount. Okay, at this point, hopefully you already know how to calculate a book value. Okay, so it's simply the acquisition cost. So the cost minus the accumulated depreciation. Okay, so this non-current asset is recorded in the balance sheet in their book value or the carrying value. Okay, any comment on the characteristic of a non-current asset? No? Okay, so to give you a bigger perspective on how we record an asset in accounting. So, like example, like a real estate company, they purchase a new building. Okay, so if the company intend to resell this building, okay, so they want to resell this building to other company or their customers, they cannot record this building as a non-current asset, but they have to record it as an inventory, right? So this is the accounting standard if you want to check how we record an inventory. Okay, so and then if they intend to use this building as their own office, so they will use this building for their daily or business operation, then they have to record this building as a non-current asset. And then if they intend to use this building as their investment, so they will generate some income or profit from this building, they have to record this building as their property investment. Okay, and if they decide to lease out this building to generate lease incomes, okay, so they have to record this as a lease asset. So what we are going to discuss today is only one alternative of recording an asset within one company. Okay, so a bigger perspective that we have to look at. There's several alternatives available of recording or reporting an asset. It depends on the initial management's intention of how to use this asset. Okay, so it's really critical that we properly identify the initial management's intention of this asset before we decide which accounting treatment should be used, okay, in the recording and reporting of this asset. Okay, so our coverage only this part, see the non-current asset part, and you may learn other alternative in the next accounting course. Okay, so what is the accounting issues of this type of asset? So at least we have 5 accounting issues. So the first one is in the acquisition phase. In the acquisition phase, the most critical issue is that we have to properly identify which costs should be included as part of the acquisition cost, right? So it's basically all costs that directly related to the acquisition process that should be included as part of the acquisition cost. Okay, so the cost like the purchase price, I think it's obvious, should be included. So the purchase price, the delivery cost, and then installation costs, and then insurance, maybe. So, but insurance is a little bit tricky. So we only include the insurance which is directly related to the acquisition process as part of the acquisition cost. And we exclude some insurance which is not directly related to the acquisition process. So you have to properly differentiate whether this insurance is part of this acquisition process or it's only insurance which covers the operational risk of this asset. Okay, the company may also pay some tax and fees or maybe some other expense related to this acquisition cost. Okay, so we have to properly identify this cost and then accumulate the total cost as the total value or total acquisition cost of this asset. Okay, and how we record this in the journal? So we simply record an asset in debit. So let's say this is an equipment. So we record equipment in the debit side and cash in the credit side. Okay, so, and if we have insurance which is not directly related to the acquisition process, we should record separately as a prepaid insurance in the debit. So prepaid insurance, or it could be insurance expense. Okay, it depends on the contract and the coverage of the insurance. And cash, credit side. Okay, so that's the first phase, which is the acquisition phase. Okay, the next one is the maintenance. So if the company start using this asset, they will need to incur some costs on maintenance, okay, to make the asset is properly functional. Okay, and we have two alternatives on how we record these maintenance costs. So the first one, if the maintenance is minor maintenance, so is, for example, if the company only replacing one or two parts of a machine, okay, or the company is replacing the one or two windows of a car, okay, that could be a minor maintenance. So we cannot expect that this maintenance will extend the economic life of the asset. Okay, then we should record this as a revenue expenditure. Okay, so we record this as a revenue expenditure, or simply as an expense. Okay, so how we record this in the journal? So we have maintenance expense in the debit, and cash in credit. Okay, and next is when the maintenance expense is a major maintenance. So if it is a major maintenance, so the company, for example, the company is replacing all the spare parts of a machine or an equipment. So after this maintenance, we could expect that the economic life of this machine or equipment will be extended because they have a new spare parts. Okay, so we should record this as capital expenditures or capex. So capital expenditure. Okay, so how we record this in the journal? So now we have, instead of expense, we have the machine, the asset in the debit side. Okay, and then cash in the credit side. Okay, we also call this process as a capitalization of expenditures. So can you see the difference between these two journal entry? So the first one, we have expense in the debit. So this expense will go to the profit and loss, okay, as a deduction of an income. So if the company record this journal entry, they will report a lower income, okay, because they have more expense. But if they use this journal entry, this account is a real account, so this should be goes to the balance sheet as an additional a value of the machine, and it will not affect the profit and loss. Okay, so the company's income will not be reduced by this journal entry, and instead the company will report a higher total asset because this additional value on the machine. Okay, so you can see that the company may choose one of these two alternatives. Okay, so they have to choose whether the maintenance suit the minor maintenance or the major maintenance. Okay, that's the second phase. The next one is the expensing. So we have two types of expensing in non-current asset. The first one, we have depreciation. So depreciation, as we already discussed, depreciation is systematically allocating the costs of a non-current asset throughout the economic life. Okay, so how we record this in the journal, we simply record depreciation expense in the debit. Okay, and then credit will be accumulated depreciation. Okay, and the next one is the impairment. Okay, so if the value, the recoverable value of this asset is declining rapidly, okay, so it's faster than the depreciation expense, then the company need to do some impairment. Okay, so in the end of the accounting year, the company should do what we call as an impairment test. Okay, it's basically comparing the asset's recoverable value is as if the company is selling the asset by the end of the accounting years, they have to estimate the amount of cash that they will receive from this disposal, and then they have to deduct the estimated selling expenses from that. Then they have the net profit if they decide to sell the asset. Okay, and they have to compare this with the book value or the carrying value of the asset. Okay, so if the recoverable value is somehow lower than the book value, then the company need to do some impairment. Okay, so how we record the impairment in the journal entry? Simply we record a loss in the debit, so loss on impairment in the debit side, and then the asset in the credit side. Let's say this is a machine, so machine in the credit side. Okay, so that's the journal entry for impairment. So this is a routine test. So every year the company have to test for impairment for all the non-current asset. If they found that the recoverable value is somehow lower than the book value, then they need to record this journal entry for impairment. Okay, so we have one more expensing mechanism for intangible asset that we call as an amortization. So amortization is basically have the same concept with the depreciation, but it's only applied for intangible non-current asset. But the new accounting standard is a little bit move away from this concept. Okay, so if you read the new accounting standard from IFRS adoption, so they already removed the amortization from the standard. So now the intangible non-current asset only use the impairment for expensing. Okay, so amortization is like excluded or maybe like obsolete concept for intangible non-current asset. Okay, so for tangible non-current asset, we have two methods of expensing. So we have depreciation and impairment, but for intangible non-current asset, we only have impairment as the only way to expense the asset. Okay, and next one is the disposal. So when the company decide that the asset is no longer useful or the technology is already outdated and they need a new asset, so they may decide to dispose the asset. Okay, so we have two alternatives of disposal. The company could sell the asset for cash, okay, or they could exchange the asset with a new asset. Okay, so exchange the old asset with a new one, which have a better quality or better technology. Okay, so in both cases, what we need to do is we have to analyze whether from this transaction the company has a gain or loss. Okay, so how we analyze this? Simply we compare the selling price. Okay, so selling price minus the book value, or the carrying value. Okay, if the selling price is higher than the book value, then we get the gain. If the selling price is lower than the book value, then we have a loss. Okay, so in terms of exchange, we just simply change this with the value of the new asset Okay, so value of the new asset minus the book value, we get the same gain or loss. Okay, and lastly, the management. I think from the managerial perspective, mostly the company try to look at the performance of this asset, okay, and how important of this asset for their operations. Okay, so mostly they use horizontal and vertical analysis. Okay, so they try to analyze the growth of the asset using the horizontal analysis. Okay, so a good company should invest more on non-current asset or PPE, property, plant, and equipment. So it shows the investor or the creditors that the opportunity to grow in the future. Okay, so they should expect that this growth should be positive. Okay, they may also use the vertical analysis. They want to calculate the non-current asset as a percentage of the total asset to see how important that this asset contributing to their operation. Okay, so this is the whole cycle of a non-current asset. We start with acquisitions, and then maintenance or betterments, and then expensing, and lastly we have disposal. Okay, so you have to be able to relate the flow or the steps of the process. Okay, so we start with the acquisition, and then with the maintenance, expensing, and disposal. And also you have to be able to know how we record each transaction in the journal entry. Okay, any comment or questions? No? Okay, so let's move to the next one. Okay, I think we have already discussed this in the acquisition process. So basically what type of cost should be included in the acquisition cost? So any cost related to the process of purchasing, delivery, installation, or any other process until the asset is ready for use should be included as part of the acquisition cost. Okay, so you have to analyze whether the cost is directly related with this process or no. Okay, so if it's directly related, it should be included as part of the acquisition cost. Okay, this is the depreciation. So some terms that we should remember when we talk about depreciations. First is the cost, is basically the acquisition cost. And then the residual value. So the company should estimate the salvage value or the residual value of an asset. Okay, so at the end of the economic life, so the remaining value of the asset should be estimated before we calculate any depreciation. Okay, and then depreciation expense is additional expense in allocating the cost of the non-current asset. And accumulated depreciation is basically the accumulation of this expense. Okay, this should be reported in the balance sheet as a deduction of the non-current asset. And lastly, we have the carrying value or carrying amount or book value is the cost minus the accumulated depreciation. Okay, so this is the method of calculating depreciation expense. So the first one we have straight line method. This is the most straightforward and simple method. first we need to calculate the depreciable value. So this one is basically the depreciable value of this asset. Okay, and then simply divide this depreciable value with the useful life of the asset. Okay, so we'll get a constant or fixed amount of depreciation cost throughout the economic life. And then reducing balance method. So the idea is that we want to accelerate the process of depreciation. Okay, so we want to make it faster compared to this start line method. So we double, I think in Australia, mostly we use double or 1.5 of the start line rate. Okay, so start line rate times 2 or times 1.5. And then we multiply this rate with the carrying amount or book value of the asset. So if we use the reducing balance method, we have to calculate the book value in the end of each accounting year. Okay, and next is the units of production or units of use. First, we have to calculate the depreciable value. Okay, and then total units of use. Okay, so the company have to estimate the total of units could be produced with using this machine or this vehicle. Okay, and then multiply this with the actual units produced by this machine. Okay, in the current year. So basically, in using this formula, we could get depreciation per unit. So depreciation expense per unit. So after that, you simply multiply this depreciation per unit with the actual unit produced by the company. Okay, next is the disposal. So we have discussed that sometimes the company may decide to dispose the asset because the technology is already outdated, or they want to purchase a new asset. Okay, so what we need to do when we have a disposal, first we have to update the depreciation up to the point of sale or point of disposal. Okay, so the point of sale could be somewhere in the middle of the accounting years. So we should update the depreciation expense up to the date of disposal. Okay, and then after that, we calculate the new book value or carrying amount. And then once we got the book value, we could calculate the gain or loss. Okay, which is the price, sales price, minus this book value or carrying amount. Okay, so in case of exchange, then we use the market value or market value of the new asset minus the book value of the old asset. Then we got the gain or loss. Okay, so this is the journal entry. So first we record cash in the debit. Okay, and then we remove the asset because we want to dispose the asset. So we put the asset in the credit. Because we remove the asset, we have to remove the depreciation as well. So we put depreciation in the debit side. Okay, and the remaining will be a loss or gain. Okay, so loss should be in the debit because loss should be reported as an expense. Okay, and gain should be in the credit because gain is part of the income. Okay, so yeah, so basically the journal is not difficult. So if you get the logic, you can easily rearrange the journal. Okay, any comment or question before we start with the homework questions? Comment, question? No? No, okay. Let's move to your homework. Okay, the first question is exercise 1. So we have Lipi Corporation. This company purchased an equipment with a price of 22,000. And now we have to identify which cost should be included as part of the acquisition cost. Okay, so we have several costs. Okay, so the first one that we should include is obviously the price of this equipment. Okay, so the purchase price is 22,000, but company have a discount, so we should exclude the discount. So 2% times 22,000. Okay, this one should be 21 something, 21 and 560. Okay, the next one is the shipping cost. So we have a shipping cost is 800. Okay, and then installation cost. So installation cost in total is 1,750. Within 1,750, there's a 1,200 for a unique stand for the equipment. I think for unique stand is straightforward. So because this stand is very unique, so it's really specific to this equipment. So I think without this stand, the equipment cannot be used. Okay, so we should include this as part of the acquisition cost. So we have 1,750. And then insurance. So in total, we have insurance cost of 2,800. So 300 is for delivery insurance, and 2,500 is for operational insurance for 2 years. Okay, as we have discussed, we only include the insurance which is directly related to the acquisition process. So we include only 300 for insurance. Okay, and lastly, we have training. Do you think we should include this training cost? Any idea?
No, because it's a recurring expense with new employees.
I think yes, we should include it because like it's needed for us to function the equipment.
Yeah. Okay. So it could be yes or no. It depends on what kind of training is this. Okay. So if this training is really necessary to make this equipment functional, okay, so without this training, the company cannot use the equipment. Okay, so this training should be directly related with the acquisition process of this equipment. Then it should be included in the acquisition cost of this equipment. Okay, but if this training is not really related with the equipment, so it should be excluded. Okay, so in this case, this training is a safety training. Okay, so I think how the company could use this equipment safely and properly. Okay, so I think in this case should be directly related with the acquisition process, right? Because without this training, the company cannot use this equipment safely. Okay, so I think we have sufficient reason why we should include this 600 as part of the acquisition cost. Okay, so this is the acquisition cost. So we have 1,560 plus 800 plus 1,750 plus 300 and plus 600. Okay, so in total, we will get 25 something, 25 and 10. Okay, please check my calculation. Okay, so next is how we record this in the journal entry. As we have discussed, we will have equipment in the debit. So equipment, debit side, and cash, credit side. Let's assume that the company pay all the costs in cash. So 2510 debit and 2510 credit. Okay, and next we have to record this insurance, which is not related to the acquisition process. Okay, so we should record, because this is a 2-year coverage, so we should record this as a prepaid insurance in the debit side and cash in the credit side for 2,800. Okay. Okay, I think it's pretty much all. Yeah, any comment or question on exercise 1? No?
Yes, can I
Yep,
ask
yep.
like why we exclude the 1,200 for the unique stamps?
Oh, no. This amount is within this total cost.
Oh, yes.
Yeah. So 1,750 inside of this cost, there's 1,200, which is for a unique stand for the equipment. So we already included it.
All right.
In this.
All right, I got it.
Yeah. Okay. Any other comment or question?
No.
Okay. So next will be exercise 5. So we have Port Kembla Steel. This company purchased a machine for 60,000. The machine has 7 years of useful life. The company assume or expect that this machine will produce 57,400 units in total. And residual value is 2,600. Okay, so we have to calculate the depreciation expense. Let's use the straight line method. Okay, so first we have to calculate the depreciable value, which is the cost, 60,000, minus the residual value, which is 2,600. Okay, and then we divide this by the economic life, which is 7 years. Okay, and then we get the annual depreciation expense using straight line method. Okay, this one should be 8,200. Okay, so year 1 and year 2 will use the same amount of expense, which is 8,200. Okay, next let's move to the.
You don't have to say that. And for the first 2 years, it's 16,400.
Which one? The using the straight line method? I think it should be the same, right? So this is
But then because it says for the first 2 years,
Mm-hmm.
oh, is it just because it wouldn't most years be the same bar like the last?
No,
Oh,
for straight line method should be the same from the beginning up to the end of the economic life. So from
the question just relates more for the other, for like reducing balance and stuff.
Yeah. For straight line method, from year 1 up to year 7, we use the same amount.
Yeah, I just read the question as like add, like it's for first and second year, so you got to like double it. You know what I mean?
Mm-hmm.
Okay, cheers.
Yeah.
Sorry, just to clarify then, so that means that for the entire duration of the year, so it's going to be the same exact amount. So we are not trying to show like maybe what Daniel was trying to say, like the accumulated depreciation after the first 2 years would be like double the amount of that right now, or will it still be the same?
Yeah, if we talk about accumulated depreciation, so the end of year 2 will be double of this amount. End of year 3 will be triple of this amount.
But, okay, so since it's only the depreciation expenses, I guess it's just that?
Yeah.
Okay, right. Thank you.
Okay, so now let's use the reducing balance method. Okay, so first, let's calculate for year one. We use the double of start line rate. Okay, so the start line rate is 1/7. Okay, so 1 divided by the economic life of this asset, multiply by 2 because we want to double this rate, and multiply by the book value or the carrying value. For the first year, the carrying value should be the same with the acquisition cost, which is 60,000. Okay, so this one should be 17 something, so 17,143. Okay.
Yes.
What about year number 2? So we use the same formula, so 1/7 times 2. But now we already have some depreciation from year 1. We should take this into account. So 60,000 minus this one, right? 17,143. Okay, so this is the book value in the beginning of the year number 2. Okay, we should get 12 something, 12,245. Okay, next is the units of activity or units of production. Okay, now first we have to calculate the depreciable value, same with this start line method. So 60,000 minus 2,600 divide by the estimated total production of this equipment, which is 57,400. So basically from this formula, we can calculate, we can know the depreciation cost per unit. Okay, so, and then multiply this with the actual production. So for year number 1, the actual production is this one. So 15,500. Okay. So this one is basically 60,000 minus 400 is the same with this 57,400. So this is actually 1. So the depreciation expense would be 15,500. Okay. What about year number 2? Same formula. 60,000 minus 2,600 divide by 57,400 times the actual production, which is 16,200. Okay, this is 1, so the cost will be 16,200. Okay. Any comment or question on exercise 5? Okay, hopefully this was clear enough. Okay, now we move to the next one, is the problem 17. Okay, so we have Sunrise Development Industries. This company purchased a depreciable asset for 150,000. So let's identify some important numbers before we calculate the depreciation expense. So the total cost, our acquisition cost is 150,000. Okay, and then useful life of this asset is 5 years, so 5. Residual value is 30,000. Okay, and then the tax rate is 30%. Okay, Now we can calculate the depreciation expense. So I prepared a table like this. I think Nelson already sent you an Excel spreadsheet for this question. So you can also use this. You can also use that Excel spreadsheet, okay, to calculate the depreciation expense. So if we use the start line method in year 2020, we calculate the depreciable value, which is this one. Okay, so this is the depreciable value, cost minus the residual value, and then divide by the economic life. Economic life is 5 years, so we get 24,000 of depreciation expense per year. Okay, and then we accumulate this depreciation and calculate the book value or the carrying amount. Okay, this will be the same throughout the economic life of this asset. So from year 2020 up to 2024, we record 24,000 of depreciation expense. Okay, so by the end of the economic life, the book value or the residual value should be equal with the residual value. Okay. Okay, so next we use the reducing balance method. So we want to accelerate this depreciation. Now we take 1.5 faster than the start line rate. So this is basically the start line rate. So we multiply this with 1.5, okay, and then multiply with the book value or carrying value. So in year 2020, we get 45,000 of depreciation expense and the carrying value of 105,000. Okay, so you can continue this calculation to the following year. Okay, so we use the same formula, 1.5 times 1/5, but now we use the book value or the carrying value in the beginning of the second year, okay, or 2021. We take from here, so 105,000 multiplied by 0.3, we get 31,500. Okay, and then we accumulate this depreciation expense. Okay, so 45 plus 45,000 plus 31,500, we got 76,500, and we calculate the book value as well. Okay, so you can continue this calculation up to the end of this assets depreciation expense. Okay, and I think the most tricky part, if we use the reducing balance method, is in the end of the accounting, the final year of this economic life. Okay, so if you see this accumulated depreciation up to the end of this economic life, so this company depreciate up to 124,000 of accumulated depreciations. Okay, while we already know that the depreciable value is 120,000. So you can see that the depreciation expense is exceeding the maximum amount of depreciable value, okay, which is incorrect. Okay, so the maximum amount in this accumulated depreciation should be 120,000. Okay, correspond to the depreciable value. And the book value or the carrying value up to the end of the economic life should be equal with the residual value, which is 30,000. Okay, so this one is incorrect. So in the end of the economic life, obviously we cannot use this formula. Okay, because if we use this formula, we will get too high of depreciation expense. Okay, that will exceed the depreciable value of this asset. Okay, so we have to replace this by simply take the difference between the depreciable value, so 120,000 minus this one, minus the accumulated depreciation up to 1 year before the final year. So 113 and 985. Then the correct depreciation expense in the final year should be the difference of this is 6,015. Okay. So you have to be careful in the final year if you use the reducing balance method. Any comment or questions on this? I think somebody.
Tao hợp lý. Gì nhỉ?
Yep.
Tao mua quả, tao ngồi tao nghe xong rồi tao.
I cannot understand your Mandarin. Tao, sorry. Could you quickly just go back to the straight line method one? Okay, so let's go back to the straight line method. This one, okay. Yeah, I think for straight line method, I think it's quite straightforward. So basically, we just calculate this depreciable value divided by the economic life, and then we get the fixed or constant depreciation expense from the beginning of the economic life up to the end of economic life. But you have to check whether it's in the end of the economic life, the book value should be equal with the residual value.
Sorry, so just to double check
Yep.
for the reducing balance method. So basically, like you said, we cannot have more than the 120,000. So
Yes.
after you change the depreciation expense to the 6,000, is that it? Or so basically?
Yeah. So first you have to check.
Yep.
Yeah. First you have to check the accumulated depreciation.
Yep.
In the last in the final year. So if this not exceed the depreciable value, it's okay. Okay. But if this exceed the depreciable value, it means this depreciation expense is too high. So we have to
Yep.
change it.
And then all you need to do is take the accumulated depreciation from the previous year.
Yep. We take this one.
Yep.
Okay.
Thank you.
Mm-hmm. Okay, so let's move to the next one. So we have already discussed this. Next, we have to calculate the tax savings of this company because this company use a straight line method for financial reporting purpose. So they will report 24,000 of depreciation expense, but the company use the reducing balance method for tax purpose. So the company report 45,000 of depreciation expense in the tax return. Okay, so because of this difference in depreciation expense, the company will also report different income figures for commercial purpose and tax purpose. It's obviously that the income in the commercial purpose is higher because they have lower expense. Okay, and the income for tax purpose is lower because the expense is higher. And then because of that, the company is paying less income tax. Okay, so we have to calculate the saving because of this difference. So how to calculate the saving is simply take the difference between these two methods. So 45,000 using the reducing balance method minus 24,000 if the company use the straight line method, and then multiply with the tax rate. Tax rate is 30%, so the tax saving is 6,300. Okay, so this is a cash flow saving. So the company is paying less tax, so you can save some cash flow. But this saving is only temporary because in the end of the economic life, the total depreciation between tax and financial purpose should be equal. Okay, so in the end, the company will repay the tax in the coming years. Right? Okay, so this is only temporary saving. So if you learn accounting for income tax, we know that this saving, temporary saving, should be recorded as a deferred tax expense in the debit and deferred tax liability in the credit for 6,300. This is beyond of this coverage of this topic, but this gives you some information on the accounting treatment of this temporary saving. Okay, just simply take the difference between these two methods and multiply it by multiply it with the tax rate.
Where is this tax taken out from? Was that from the initial purchase or from future tax?
No, this is the current tax.
Yeah.
Yeah.
But so are they paying tax on something they already own?
No, this is the income tax. So let's imagine that this is, so this one is the tax return.
Mm-hmm.
Okay, and this one is the financial statement or profit and loss for commercial purpose.
Yeah.
Yeah. Okay, so in the profit and loss for commercial purpose, the company report an expense of 24,000. Okay, so the income should be higher in this profit and loss compared to the tax return, which they report 45,000.
So is that basically what the difference in how much money they've lost, and then multiply it by the 30%?
Yeah.
So
So
would be taken from that?
no. The difference in these expenses will be translated into difference in income, and the income that
It's taxed at 30%.
used for in the tax return to be based of their income tax, right? So because they have a lower income in this tax return, they will have this saving.
Okay, I think I got you.
Okay? Yeah, this is comparing the tax return and the financial statement.
Thanks, Dan.
Okay. Any other comment or questions? No? Okay, so the next one is C. Now the company decide to dispose the asset. So first they consider to sell the asset for 90,000, and they also consider to sell the asset for 48,000. Okay, as we have discussed, we have to evaluate whether this company have a gain or loss from this transaction. Okay, so the first transaction is 2022. So the sale price is 90,000, and the carrying amount we can take it from here. So this is for number 1. So the carrying amount is 78,000. Okay, so you can see that the sale price is higher than the carrying amount. So for the first transaction, the company will get a gain for 12,000. Okay, for the second transactions, the company sold the asset for 48,000, while the carrying amount is 54,000, right? So for the second transaction, the company will get a loss, okay, for 6,000. Okay, so just simply compare the sale price with the carrying amount at the point of sale. Okay, so we already calculated the carrying amount in the table. Just use these numbers, and we can calculate the gain or loss. Okay, the next one is how we record the transactions. So the first one, the company should record a cash in the debit. This is 90,000. Okay, and then they want to dispose the asset, so they put the equipment in the credit side for 150,000. Okay, at the total cost, they have to remove the accumulated depreciation as well. So they put it in the debit. Okay, so the depreciation is 72,000. So this one. Okay, and the difference will be the gain on sale of non-current asset. Okay, this one is 12,000. Okay, so this is the journal entry to record the transaction number 1. I think you can practice using this journal entry for transaction number 2. So I'll leave this for you to practice. So the logic is the same, but in this case we have a loss instead of gain. So you have to rearrange the journal entry, okay, to accommodate the transaction number 2. Okay, any comment or questions on problem 17? No? Okay. Let's move to the discussion question. So the question is that evaluate the advantage and disadvantage of depreciation as an accounting concept. On balance, do you think the measurement of depreciation aids accounting practice? So as we already discussed, that the depreciation is simply systematically allocating the cost of a non-current asset throughout the economic life. Okay, so if we identify some benefit of this concept, first, by systematically allocating the cost, we are maintaining the matching cost against revenue principle. So matching principle is properly maintained. And because of this concept is purely accrual, it's a non-cash transaction, we also maintain the accrual accounting principle. Okay, so the financial statement will capture a proper amount of the income of the company's income. Okay, and because of this, the process is systematic. So the users of financial statement could predict the amount of the depreciation expense that will incur in the following years. Okay, so by doing this, we basically improve the predictability of a financial statement. Okay, that's some of the benefit of the depreciation. I think you can add more benefit if you have additional reference. Now, what about the limitation? As we have discussed that calculating the depreciation expense requires many assumptions. Okay, so the company first they have to assume the economic life of the asset, and then they have to assume the residual value, and then they have to assume the total quantity could be produced using this asset. Okay, and thus that assumption may be subjective. Okay, so the company or the managers may choose the assumption that will give them the optimum benefit. Okay, so there's some subjectivity in making the assumption. Okay, and then because the transaction is fully accrual, it's not related to cash flow. Okay, so it's not related to cash inflow and outflow. For some users of financial statement, cash flow is more important than the net income or net profit. Okay, so it's not really useful for them if they want to calculate the cash flow. And depreciation expense is basically backward looking. So we just allocate the historical cost, the past costs throughout the economic life. But some users of financial statement may want some information that more forward looking. Okay, so they might need to evaluate the value of the asset, and they won't be able to use depreciation expense as one of the consideration when they're making the prediction or the valuation of the asset. Okay, so it's not really helpful for asset valuation. Okay, so this is some of the limitation of this concept. But on balance, what do you think? This is more benefit or more cost for companies? Any idea? No idea. So in my opinion, I think the benefit is outweigh the cost. So I think in balance, still depreciation still give more benefit to maintain the consistency, the matching principles, and the accrual accounting. Okay, so I think we still need this concept to be implemented. So as we have discussed, the amortization is already taken away from the accounting treatment for intangible non-current asset. Maybe in the future, if the standard setter thinks that this concept is not relevant anymore, they may also took away the depreciation concept from the tangible non-current asset. Okay, but at the moment, we still think that this concept is bring more benefit compared to the limitation. Okay, so the last one is the practical question. This is not part of your homework, but it's to add more recent cases related to the topic. So we have a case of a gambling company, Top Corps. The company announced 1 billion of impairment, and suddenly the share price is declining by 5%. Okay, so we have discussed that if the company report impairment, okay, so they will lower the total asset because they will report less asset in the balance sheet. Okay, so total asset will be lower, and for investor and capital market players, this is a bad news, right? This is a bad news. So when a company losing their asset, this is considered as a bad news. Okay, so in the capital market, we have a concept called efficient market hypothesis, which argue that the share price will efficiently reflect all information that's available in the market. Okay, so if the investor get this kind of bad news, they will react by selling the share in the market. So the share price will be declining. Okay, so the share price will reflect the bad information which is available in the market. Okay, so we can learn that one thing is that reporting a lower asset is a bad news for the investors. And the second thing, the market is efficient. So whenever bad news or good news available in the market, it will be reflected in the share price. Okay, I think that's pretty much everything. Any comment or questions? No? Okay,
No,
so
I think the only question I have is there like a student version of this on UTS Online, like tutorial?
Slides, you mean?
Yeah, slides, yeah.
Not yet, but I think I will just email you the slide.
Oh, okay.
With my messy annotation.
That's
so
fine.
you can have a look, and I will also send you the link to this recording, the video.
All right. Yep.
Then also have a look.
Thank you so much.
Okay. So any other comment, question? No. Okay. So I think we can end our first tutorial. So hopefully you will enjoy this tutorial up to the end of this semester. Don't forget to submit your homework before the due date. Okay. So if you have problem, you can always contact me. Then we can discuss the solution. Okay. So thank you very much.
Thank you.
See you next week.
Thank you.
Thanks for that.